Many people want to get started with investing, but they are confused on what exact steps to take. And this may be you as well. So you've heard about real estate, how some persons 15-20 years ago bought land in certain places and today they have become very wealthy. You also have heard about the stock market, how some persons bought Nigerian shares 2 years ago and even last year and have had a return on their investment capital to the tune of 100%, 200%, and even more. And so you're asking, should I buy stocks or should I buy real estate? You also have heard about mutual funds, how you can invest a small amount of money and get returns on a monthly basis or on a quarterly basis. The question you're also asking is, should I buy mutual fund? Now, I understand how overwhelming it can be, especially if you're a beginner. But one thing you need to know is that investing is good, investing is important, investing is how you can build wealth over time. But if you do not understand the rudiments of investing, you're going to make fatal losses. My name is Ogochukwu Okolocha, and over the last 6 years, I've been helping individuals like yourself to invest profitably in a diversified portfolio of assets. These assets include real estate, stocks, mutual funds, bonds, commercial papers. Just think about any legitimate investment opportunity out there. I can help you get started with it. In this video, I want to share with you 7 steps to help you start your investment journey the profitable way. Step 1, fix your income first. One mistake that many young people make is trying to invest in assets when they have not figured out their income yet. Now, you see some persons earning 50K or even less, and they are thinking of buying a stock or a crypto that's going to help them become rich. You saw many people spend their time tapping their phone, hamster combat, and all of those opportunities just to see how they can transform their small 1,000 naira to maybe 1 million or 10 million. Now, there's nothing wrong with investing in assets like crypto or stocks. Very beautiful. There's also nothing wrong with investing little amount of money. But there's a certain stage in life where you have to prioritize investing in yourself over investing in assets. And here's why. That's the amount of money that we use to buy stocks or crypto, maybe 10K or 20K. You can use that money on personal development. For some of us, might need to learn a digital skill. And then you take that money to go and buy a stock and have to wait over 1 year before that stock can go to 20,000. But someone else that took that 10,000 naira to buy a course, maybe graphic design or video editing, and they commit themselves to learning, that 10,000 naira can start yielding 100K or even 200K per month in the next 6 months. So this is the idea behind fixing your income first. Pursue activities that would increase your income in a shorter time over investments. You know that investing is a long-term thing. We're not investing in assets so that we can become rich. We're investing in assets so that we can multiply the money we already have. And this is the reason why a lot of people make mistakes when it comes to investments. First, they're investing money for survival. They're investing money that they can use for personal development, and that's why they're not patient. So they see a 10% rise in a particular crypto asset or stocks and they're excited. And then when it does a negative of 10% or even 5%, they start panicking and then sell at a loss. So right now that you're still earning low income, you're earning 50K, 100K, prioritize investing in yourself. When you have exhausted opportunities to spend money to increase your capacity to earn more money, then you can prioritize investing in assets. Now, before we go on to step 2, if you're watching this video before the 7th of February 2026, I want to invite you to my upcoming free investing webinar. In this webinar, I'm going to be teaching the fundamentals of investing. I will share with you where to invest, how to invest, what to invest in 2026 and beyond. This is an opportunity for you to know the different types of investment opportunities and how you can get started with them easily. So if you'd like to attend this free webinar, see the link in the description, click on it, register, and I will see you in class. Step 2, build an emergency fund. The question now you may have is, what's an emergency fund? An emergency fund is 3 to 6 months of your living expense saved in a risk-free account so that in case there's an emergency, you can take money from there to start that emergency. Emergency fund would protect you or limit you from liquidating your investment when you need money urgently. Now, some persons have invested in cryptocurrency, they invested their house rent, they invested money they needed for education, and when there was a crash in price, they couldn't wait and they had to liquidate at a loss. If they had an emergency fund, they wouldn't have had to liquidate their investments at a loss. So this is why emergency fund is very important. If, for example, it costs you 200K to survive on a monthly basis, your emergency fund will be 600K to 1.2 million naira. Once you are able to build to that amount, you no longer need to add any money to it. All other income that you earn can be distributed to either short-term savings or long-term investments. Also important, I say this again, your emergency fund should be in a risk-free account. I see some of us put our emergency fund in fintech apps like PiggyVest, MoneyBack and co. It's a good idea. But don't forget that this is money that you need in a case of emergency. Say you have job loss or car accidents or health issue, I need to sort that thing instantly. You don't want a situation where you open your app and then it's not working, or they tell you 2 days or 3 days and then you start running a tasketa. I often recommend that you leave your emergency fund in your bank account, either in your dorm account so it doesn't lose value due to devaluation of the currency, or just leave it in your commercial bank account. But if you're greedy and you're like, oh, I can't leave it in my bank account because they're not going to give me any return on it, then you can divide it into 2. Put some parts in your fintech app and leave the other part in your bank account. Bank account that is not prone to easy access for you to spend. Maybe one of those accounts that you have to walk into the bank before you can access the money. Don't be too greedy that you take your emergency fund to put it in the aggressive growth opportunity, and then when you need it, you may not have it. Step 3, eliminate bad debts. Another mistake I see young people make is trying to make money via investing before paying off their bad debts. In fact, some persons borrow money to invest so that when they get a return on that investment, they can sort out their previous debts and the new debts. That's a very smart idea, right? But you don't own the market, especially if you're investing in the stock market or the crypto market. Today, Bitcoin is about $83,000. A few months ago, it was $120,000. Some people thought that it was going to go to $200,000, but look at where it is now. So imagine somebody has taken a loan to buy Bitcoin or buy Solana or whatever cryptocurrency out there. That person is going to be sitting now on what we call potential losses. So don't be too greedy to want to multiply small money you have before you pay your debts. Those bad debts that you have are already accruing in interest. In fact, they're going to cause pain to either you or your family members. There's some people that you owe money, they start sending you threat messages, they send people to block you on the road and all of that. That will destabilize you. So always preferable that you sort out your bad debts first. Debts that are not going to add any value to your life, either directly or indirectly. Debts are not going to grow your net worth. Sort those debts out first. Now, I'm not saying that debt is bad in general. Remember, I said bad debt. So if you have a good debt, good for you. I mean, good debt that interest is maybe 8 to 10% per annum. That's a good debt because the interest rate is lower than inflation rate. But if you have a bad debt where the interest rate is about 28% or even more per annum, now sort it out first so that you can focus on investing. Step 4, define your investment goal. There's something I often say, no two investors can invest the same way. Even if they come from the same family background, they work in the same organization, live in the same environment, they can never invest the same way because their age is going to differ, their investment appetite is going to differ, their time horizon to wait for the investment to come back to them is going to differ. So it's very important that you ask yourself before you start investing is, what exactly do I want to get out of this investment opportunity? Do I want cash flow? Do I want to be getting dividend payments either on a quarterly basis or on a yearly basis? Do I want just capital appreciation, right? So I want to invest in this opportunity so that the next 5-10 years, I'm going to get maybe 2x, 3x, 5x of my investment capital. Or maybe you want a mix. You want capital appreciation, you also want dividend payments. Just make sure you define what exactly you want to get out of that investment because there are different investment opportunities and the mindset that you have towards investing is what will guide you to which of these opportunities or asset classes to choose. And that's going to take us to the next step, which is step 5. Pick your asset class carefully. There are several asset classes out there, ranging from low risk asset class to high risk asset class. In this video, I'm going to be sharing with us 6 asset classes, and I'm going to talk about the risks associated with them, the amount of money you can invest, how easy it is for you to liquidate your investment capital whenever you want to liquidate it, and how much return you can get over time. The first one is bonds. Bonds is low risk, and you can invest as low as 5,000 naira. You're going to get your dividend or what we call interest on a quarterly basis. For example, the FGN Savings Bond, if you invest for the 2 years tenure, you're going to get 8 interest before you get your capital returned back to you. And for bonds, you cannot liquidate until the end of the tenure. So if you want to invest in bonds, bear in mind that you have to wait till the end of the tenure. The next one we're talking about is commercial paper. Commercial paper is similar to bonds, but commercial paper is usually issued by organizations. Commercial paper is a debt instrument. Bonds issued by the government. Commercial paper is issued by corporate entities. So think of companies like Boa Foods, Dangote Cement, Dangote Sugar, even Providus. Last year, some of these companies I mentioned had commercial papers issued to the public. Commercial papers are usually low to mid-risk depending on the company. Some companies, based on their financials, based on their reputation out there, we can say their commercial paper is low risk. But there are some, based on how bad their reputation is out there. For example, Sujimoto released a commercial paper last year, and I want people in my community to stay away from it because that kind of commercial paper is high risk because of the kind of reputation that Sujimoto has out there. Another thing to know about commercial paper is that the tenure are usually short. It's either 180 days or 270 days. And for commercial paper, you have to wait till the end before you can liquidate your capital. When investing in commercial paper, you can choose to get your interest upfront or at the end of the tenure. And the asset class I want to talk about is mutual fund. Mutual fund is like a basket of multiple investment instruments like bonds, commercial papers, treasury bills, and even stocks in some cases. So a mutual fund is usually managed by an authorized or recognized or registered fund manager, the likes of AfroInvest, Stanbic, and FBNQuest. These fund managers pull money from different investors like you and I and then distribute it in multiple asset classes. So at the end of the day, they will now calculate how much return they got and distribute it to all of the investors. Mutual fund is usually low to high risk depending on the kind of mix that the basket has. For mutual fund that has low risk instruments, then you can look at it as low risk. So we have money market instruments. Today in the money market space, we have return up to 17%. Depending on the fund manager. Mutual fund, you can also liquidate all of your capital within the first 3 months. I mean, after 1 month, you can decide to sell off everything you have and get back your investment capital without any issue, without any worry. So mutual fund is very flexible compared to commercial papers and bonds. And the asset class I want to talk about is stocks. Now in Nigeria, a lot of people are talking about the stock market. Very interesting, right? You can invest a small amount of money and have it double within the next 3 months, 6 months, and more. The stock market is very volatile. So it's a high risk asset class, meaning that you can lose a part or all of your capital. This is one thing that many people do not like to hear, but I often tell people that you can make money in the stock market is correct. But what you also need to know is that you can lose your capital in the stock market. So if you are investing in the stock market, I usually recommend that you have a long-term horizon. 2 years, 3 years. Despite the fact that you can buy a stock today and sell tomorrow, don't go into the stock market with that mindset, because you can buy a stock today at 100 naira or $100 and then tomorrow it's going to drop to 90 naira or $90. You do not want to be in a situation where you invest your house rent and then your landlord comes knocking and then you check the value of the money you have invested is less than what you are invested in. What are you going to do? Either you sell at a loss or you start telling your landlord stories. So I always tell people that come to me not to invest money they need in the short term in the stock market, except you are an experienced stock trader. And the second to last I'm going to be talking about is cryptocurrency. Cryptocurrency is similar to stocks, but difference is that stocks is like you investing in established companies like Coca-Cola, MTN. Think about all of those popular companies out there that you consume their goods on a daily basis. But digital currencies, they don't exist. So you're just investing in, would I say, hope that a currency would go up for no reason. Maybe just based on the community driving it and what they call its use case. So it's different. So it's not tangible. This is why I always tell people that when you're investing in the stock market, do not carry the crypto mentality into it. Likewise, when you're investing in the crypto market, don't carry your stock mentality into it. There are two different markets and they are both high risk, but crypto market is very, very high risk. The stock market over time has shown to be profitable. You always get your capital back. But in the crypto market, the only asset class that has proven to go down and recover back consistently is Bitcoin. So don't liken for any reason the stock market to the crypto market. There are two different asset classes and the approach to them has to be different. In fact, I always recommend that people that are above 40 to stay away from the crypto market. And the last but not the least is real estate. Real estate is one of those asset classes that I use as a means to preserve my capital. I don't see it as a capital growth opportunity. I see it as a capital preservation opportunity. So for some of us that are already exposed in the crypto market and the stock market, you can consider real estate as a means to diversify your investment portfolio. So during the period of bear market, the crypto market or the stock market, it won't feel very bad because you have some of your money in the real estate market. The beauty about real estate markets is that the price of assets goes up in one direction. Volatility in Nigeria especially is very, very low. But the drawback about real estate is that you will not be able to get your money out immediately. Unlike stocks, you can buy today, sell tomorrow. Same thing with crypto. If you buy land, before you even get the documents, it can take maybe 1 week, 2 weeks, depending on the real estate company. And then whenever you want to sell, you start having to advertise it, put it on different platforms, or sell back to the real estate company. Most times they will now buy it back either at a lower value or at the same price you bought. So if you are looking for short-term opportunities to grow your money, stay away from real estate. I know some of my real estate friends will not like this, but as I will say always, if I don't tell you this truth, nobody else will. Step 6, diversify. This is one rule I always share with everybody, that do not put all of your eggs in one basket. Real estate, like I said earlier, is beautiful. You can build wealth over time, low volatility. You can also build wealth via the stock market over time. But you see, both have different behaviors, different performance within a period of time. The stock market is high risk. You can lose all of your capital. The real estate is low risk, but selling your property can be very difficult at times. So you would want to have in your investment portfolio some assets that you can liquidate easily, and then some that you're very sure that the amount that you spent in acquiring it, that is the minimum that you can sell it at. Very important. Then you also want to have some of your investments that will be giving you returns either on a quarterly basis or on a monthly basis. Just make sure you have a mixed investment portfolio. If you're just starting out, you can consider 2 to 3 asset classes for a start. For example, you can do mutual funds, stocks, and then bonds, or mutual funds, stocks, and real estate. Don't start off with all of the asset classes that are there, especially for those of us that are low income earners, right? It's not going to be smart that you have your small investment capital distributed across multiple asset classes. That would be over diversification. Yes, there's something like that. So start off first with 2 to 3 asset classes, especially from the ones you understand. As time goes on, you start adding more asset classes. Maybe you start doing what we call balancing of your investment portfolio. You can decide to liquidate some of your assets that are in bonds, or would I say commercial paper, take that money to transfer it to stocks. Whatever it is, just make sure that you have a diversified investment portfolio. It's going to help you, especially in cases where there's a downturn in the market, especially the stock market or the crypto market, so you would not have total or what we call fatal losses. Some persons have dropped from multi-millionaire to 0 naira because they had all of their capital in the crypto markets. Don't be like them. Don't say I did not tell you. Step 7, think long term. One of my famous quotes is, investing is a marathon and not a sprint. It's not the day that you start investing that you start reaping the dividend of the investments. So you have to be patient. Patience is a strategy. Patience is why we have successful and great investors like Warren Buffett, right? Who would say, be greedy when others are fearful, and fearful when others are greedy. It is not when prices of assets are crashing that you want to start selling. That has led many people to fatal losses. It is when the prices are low that you buy and sell when prices are high. So if you're not a patient person, you're going to panic, and you sell at the wrong time, I won't buy at the wrong time. So patience is a strategy that you need. And this is what I said in the beginning. If you have not sorted your income parts yet, forget about investing. Focus on that first. So you don't take money that you need for survival to invest. And then when the markets start experiencing, the volatility as it's supposed to be, you start panicking, start shitting your pants. Some persons have come to my DM asking me, Ogochukwu, I bought the stock at $10 and now it's $9. What should I do? Come on, that is how the market is supposed to behave. So some persons will say that patience is a virtue. So if you don't have that virtue, go and learn it. That is how I've been able to build a profitable investment portfolio in the crypto market and the stock market over the last 7 years. The bonus step for us today is stay informed. One thing that some persons do is that once they buy a stock or they buy land, they just forget about it. See, I understand that investing is supposed to be passive, but you can't just buy an asset like stocks or crypto and forget about it. You have to be aware of what is happening at least on a monthly basis. This is where I recommend that you join communities, right? Join investment clubs. In ML community, we have an investment club, and we always give updates to what's happening in the stock markets and crypto markets and even the global markets on a regular basis. Because the strategy to which we invested last year is not going to be the same this year. I remember 2023, 2022, I talked about investing in dollars. I talked about how you should stop saving in Naira. But last year, which is 2025, I talked heavily on investing in Naira instruments. So the question will be, what changed? The dynamics has changed. The economic situation of Nigeria has changed. This year, I'm also saying that we should prioritize investing in Naira instruments, especially the Nigerian stock market. Would I also say the same to 2027? I'm not very sure about that. So things are going to change as economy goes. So you have to be in communities so that you can get those updates early enough and can take actions that will help you to grow your wealth or cut losses, as the case may be. If you succeeded in watching this video to this very point in time, I want to thank you for spending your very valuable time with me. I hope you got value from all of the steps I've shared with you. If you did, please let me know your thoughts in the comment section. I'm looking forward to seeing you in the next one. Don't forget to like, share, subscribe. Bye for now.